Welcome back to another Market Open live stream. Back from vacation yesterday, so missed you yesterday. So a few crazy things happening already so far today. First of all, or the rumors are circulating that will February be the month of a giant short squeeze, one that we've kind of been waiting for, since like December, because the shorts have just been going ridiculous, and they've been making a lot of money, so you almost can't blame the shorts, but the shorts have been making a ton of money, and short interest has skyrocketed on everything. The only place so far that I've seen an inflection point down is slightly was in ARK, but otherwise the small caps and the other sort of famous Shift Technologies, Tattooed Chef, Lemonade, some of those at the top of the short interest list are still sitting there, the top of the short interest list. And so with January being one of the worst Januaries that we had seen, I want to say since the early 1900s. I've got it written down here, but let's see here. This was the worst Januaries. No, this is just straight up one of the worst Januaries for the S&P 500 that we have ever had. Some folks are wondering if what happened in January is a sign that maybe we're not going to have the best potential January. The average return for the S&P 500 in February ended up being negative after a January decline of more than 5%. And again, one of the worst Januaries that we've ever seen. This is pretty wild. But again, also, in my opinion, this is just my opinion, one of the most highly shorted Januaries that we've seen. Not sure. I haven't been able to corroborate the historical short interest, but it's incredible how shorted the market has been. So I do wonder if we could see some more explosive volatility to both sides. What we had been seeing since the beginning of January is a lot of rallies followed by quick sell-offs, not necessarily immediately. We had a lot of this ridiculous movement. What we really have to be careful of, though, is that we start hitting some newer highs in some places. Otherwise, the market can start getting a little bit nervous. Let me give you an example of that just by drawing it. And the reason for this is if you go back to, let's see here, there we go. If you go back to any of the other earlier crashes, like 2008, dot-com bubble, doesn't really matter. Usually the pattern that you see is something like this. The market kind of moves up to all-time highs, and then you get a correction. Sometimes that correction is even a little bit sharper. You get this decline, and then you generally have folks, I hate to say it, but like Jim Cramer, who are like, oh, don't worry, we're coming in for a soft landing. Everything's going to be fine. And then that feels like it's correct when we get sort of the first violent rebound. But the danger comes when we do this, right? And so that's the danger in the market, is that what we don't want to see is sort of these lower highs here. That's an issue. We are going to get violent moves to the upside. And that's normal in a high volatility environment, just like insane moves to the downside are normal as well. The question is, when does that vol go away? When does that volatility decline? When does that short interest decline? I think that's going to be critical here. And seeing if there's going to be any short covering in February will be pretty impactful and pretty powerful for the markets, I think. Now, it is also, though, important to note that we still have the Federal Reserve's meeting coming up on March 16th. We got a few very important dates. We've got Feb 4, which is jobs data day. Then we have, let's see here, CPI coming out on the 10th. Also quite important. So both of these will be very, very critical. Both of these will come out at 5:30 a.m. So if you haven't yet set your alarm or a reminder or something on your calendar to check back here, do consider doing that. Again, that's the 4th and 10th of February. And conveniently, you've also got the same date set up for March. So the 4th, you'll have employment numbers again, and CPI on the 10th. So important dates. These will be four massive pieces of data that'll precede the March 16th Federal Reserve meeting, which is actually from the 15th to the 16th, when Jay Powell will come back out again, and we'll see how hawkish they are. So far, we've heard from a couple more dovish members of the Fed, one that I reported on Friday, and then another one who had an interview with the Financial Times over the weekend. And both of them seem pretty darn convinced that we're pretty much guaranteed having a 100% rate increase, or a 25 basis point increase on March 16th, and even a good chance of a 50 basis point increase on the 16th, which hasn't been done since the dot-com bubble. And there have been plenty of people freaking out about the comparison of now to the dot-com bubble. And I always think it's interesting to kind of compare what we have going on sort of in either our lives or in society, and look around and ask, hey, like, do we have excessive speculation in certain areas of the market? Has that speculation already been dealt with? And the fact that so many stocks are so substantially down, who knows? Is there more to go, or is this it? Did we hit our bottom? At some point last week, whether that was the early morning or the early week disaster of like Monday, Tuesday, or the super early morning crisis that we had. I think it was on Thursday when Tesla was like 790, for example, which was right after amazing earnings, mind you, amazing earnings by Tesla. Might have been Friday morning. But anyway, amazing earnings by Tesla. They got sold off. It's wild. A lot of institutional investors seem to be chasing stocks that have or are reporting increasing margins. So keep that in mind when you're looking at companies to evaluate. Increasing margins is a sign of inflation protection, or at least so institutional investors propose. And it doesn't necessarily have to be that case. Anyway, and there was a little note by the CFO over at Tesla that margins in the near term would be a little rougher than in the long term. And so I think that may have contributed to a little bit of that sell down that we saw. Obviously, Tesla has recovered very nicely in just the last day here. Anyway, then we've also got apparently Sony buying Bungie, which if anybody remembers Bungie from way back when, they made some of the original Halos, and obviously more recently made Destiny. So Sony's buying them for $3.6 billion. This comes after Microsoft announced that they're buying Activision Blizzard for $69 billion, which I always thought was a really weird number given all the sexual allegation issues going on over at Activision Blizzard. It could just be bad rounding by media, though. And then you do, though, have the FTC now talking about investigating Microsoft and the Activision Blizzard deal. As a result, I can't really say that this has really hit the stock at all. Microsoft's only down about 0.12% right now in the pre-market. Okay, let's see. India's warming up to crypto. Google, Exxon, PayPal report today. And yeah, a lot of talk about the ISM surveys that'll come out today. We'll see. All right. Cool. So let's go ahead and jump on over to the sticks. And we're going to start with Bitcoin and our sponsor, FTX. So if you haven't signed up for FTX yet, consider checking them out. But make sure you sign up with a referral link like the one in the description down below. Take a look at Bitcoin's very nice ride here, coming back very nicely, almost to 39,000. And this is critical because we were stuck down in that so the mid 36 range for quite a while. And the fact that we've now moved out of this is a pretty critical test for the market, because whether Bitcoin ends up leading the market or the market leads Bitcoin, doesn't matter. They seem to be sort of signs and symptoms of each other. And this is where we really had been stuck a lot, in this 36 range. At one point, we were just below 36, with a more violent drop to just below 33K. But moving back above some of these prior levels here is going to be critical, especially if we could start breaking out over this 39.2 level right here. I think this was a critical test after our first big drop here, for one of our first larger drops from just below 44,000. So if we can really break out above this, especially today, I think that'll be critical. Get a nice solid close over that 39.2 line. That will be very positive. All right, let's go ahead and jump on over and see what we've got over here. All right, so let's take a look at the pre-market. Let's start with positive news. Look at this, folks. We got AMC up 9.9%. It's incredible. I mean, it's not incredible that it's $17. I remember when this fell under $20, there was a lot of social media discussion over what the heck was going on. But this is a sign that there's a little bit of that risk on coming back, right? When you see small caps move, when you see the previous momentum stocks move, oftentimes that's a sign of risk momentum coming back. Does not necessarily mean it's going to last. Hopefully it does. The big risk is that short sellers take the opportunity to pile shorts on again to hedge against bad news. The unfortunate issue here in our markets right now is we have more bad news coming probably than we have good news. We're not expecting great things that are going to help chill the Fed out from their hawkish demeanor when you look at either jobs report coming up or either inflation report coming up. However, if we got an inflection point to the downside on those, that, in my opinion, could be a perfect catalyst for a short cover rally. And the question then is how excited can the market get before those events, though? And that'll be a big tell. I do think after a larger rally like what we saw yesterday, with look at this, Shift Technologies up 15%. I mean, the thing's still under $2.50, which is wild. But anyway, up 15% on Shift Technologies here yesterday. Today is up 5.6 in the pre-market. If this can hold, that could start making some shorts a little nervous. Maybe start taking profits on their shorts, which of course would increase the price, because when shorts cover, they have to buy the stock. Matterport, look at this. Matterport coming back from the depths of despair. I mean, Matterport for a period of time went to $8, which is also quite wild because it's a phenomenal company and has been a big subject of sort of the metaverse debate. But again, institutions fleeing to this apparent safety of higher margins, higher net margins. And unfortunately, Matterport does not have net margins. Neither does Shift Technologies right now, and as most SPACs don't. I think SPACs almost have to sort of be looked at as a smaller company that's almost kind of like private equity money, where it's just like you're investing, like angel investing or venture capital investing, because they're so early in their processes usually. But that certainly doesn't help them in this market. Anyway, okay, I did see that NEO yesterday had a wild ride as well. Let's take a look at NEO here. Yeah, NEO back to $25 here in the pre-market briefly, sitting just right about $25 right now, up 2%. Absolutely crazy. So where's NEO? NEO did drop below $20 for a period of time. Look at this here. Look at that. With 1931 on Friday morning. That's incredible. That was definitely a big old pain point right here. Now the question is, will this end up having been peak pain out of this entire rut that we've been in? And so that's another thing we want to look at, is just zoom out on the day chart here and look at December 6th, which was a horrible day, and notice how what we've really been getting here are lower highs, right? And that is the risky part about this market. So remember, towards the beginning of this live stream, just in case maybe you joined a little later, we were talking about one of the most important things to remember, that market crashes like in the 2000s to 2003, which lasted 3 years basically, the 2008 crash, the market doesn't go straight down. It has these crazy rallies like what we saw yesterday. The big test is, can we get back above previous levels? That is a critical test in this market. So in this case, for NEO, for example, can we get back into the 30s? I mean, we're at 25 right now. So we've got a beautiful candlestick back up to that $25 range. But the trend is not our friend here, and neither is Jerome Powell. I tweeted again this weekend that Jerome Powell is not my friend anymore. Anyway, so looking at Beyond Meat, I mean, all of these have almost every single stock has hit its bottom here. Let's try to find some that haven't recently hit a bottom on Friday and look at some of them. I mean, $50 for Rivian. It's sitting at $65 now, which is just a wild swing of a difference. But is this just the anchor along the bottom, right? I mean, take a look, or just you're not even finding the bottom yet. That's the worry. I mean, we've had these rallies before too. Probably not. I haven't seen this wild close though on Shift Technologies, which I think is good. See here, yesterday we had this 11.92% close. Most of these previous rallies that we've had on Shift, where we had like 11 to 15% days, have sold off prior to the close. So I do think that's a good sign for markets that we had some of those stronger rally numbers actually close yesterday. See back here, you had a 7% day, 2% day on Upstart, a 6% day. And, I mean, obviously surrounded. Oh, here you go. We have had a previous rally moment here. So December 6th was a very bloody day in the market, very bloody. And the very next day was also green, December 7th, which would be, well, not also green, was green. That kind of compares to Monday, right? Friday to Monday, this disastrous Friday, followed up, at least at the beginning of the day, followed by a strong green the day after. But look, folks, that was December 7th. What's scary about that is even though we've lived this world before where we had this, upstarts going down to these crazy low levels. I remember covering this at the time on the 7th. It's at $170 and it's down 5.2% on the 6th, which was following this insane plummet here, only to rally like crazy here, 11% the next day, 1.85% the next day. And then it took a few days before we actually started getting sort of another red decline. And this is what we want to prevent. These rallies will happen. This is what we want to prevent, the trend. And so that is where we're really looking for. Can we just break some of those levels where we've been sitting? And can we get to new highs or even just relatively recent highs? All right. So, for example, Tesla, whatever, 950 or whatever. Can we actually break above one of these other crest points here? Like, can we break above 1118 or 1115 and actually close above that? Right. That would just be critical if we could do that. That would be quite great. But we'll see. So let's look at Lemonade here. Lemonade went as low as $25.83, back to about 31 now. Robinhood fell down $9.94. Oh my gosh, on earnings day, only to recover substantially now at about $14. Kathy Wood, by the way, buying lots of Robinhood. I've been buying Robinhood for a while. Here's an interesting quote. Somebody says, No amount of good news moves a bear market. No amount of bad news moves a bull market. No amount of good news moves a bear market. No amount of bad news moves a bull. That's an interesting argument. And it's basically like, because if you go back to November, we had this insane like bull market rally, right? And it's kind of true to some degree. You didn't really need any news. The market was just going straight up, right? And to the point of the quote here, it's like, what good news is actually going to move the market? And so the bear market thesis really just has to end. And that's when shorts cover, and that's when we can bail out of this disaster the stock market has gone into. I mean, really, nobody hasn't been hit by this unless you somehow perfectly moved from every stock that you've owned into like BP, unless you perfectly nailed that somehow. Everybody's been hit by this. So it's quite interesting. But anyway, we'll see what happens here. How are our indices doing today? Let's go ahead and pull up CNBC. But anyway, we'll see what happens. So again, waiting for a break of 39.2 on BTC. Right now on FTX, I've got BTC sitting at 38.928. Really hoping for that break above 39.2, just to hopefully then push us back up to about 44. So let's see here. Someone here says Kathy Wood sold a huge amount of Palantir yesterday. Let me go fact check that quickly. I have her trade. Here we go. ARC 31st. All right. Ooh. 275,000 shares plus 447,000 plus 1.4 million. My goodness. I mean, we're at 2 million. Here's about another million. 3 million shares. 1, 2, 3, 1, 2, 3. What's the darn thing trading for today? Let me see. 3 million. Let's see how much she had. Palantir's at 1371. I can't believe that low. 1350, let's call it, times 3 million. 1, 2, 3. 1, 2, 3. That's $45 million worth. I think that sounds a lot larger than it actually is, because let's see how much she actually owns. I think that's the tell. All right. So sold 45 mil, and of Palantir, she's got Yeah. Okay, so she sold like a 10% of her Palantir position. That looks a lot probably scarier than it was. It'd be one thing if she dumped like everything, but yeah, she's got just over $420 million of Palantir, or had, and just sold about 40 mil of it. So that's interesting. Somebody's asking if I'm still hodling AMC. That was my deal. Still holding it. Okay, where are we here? Sure, let's see. Sound like the Grinch. Grinch who stole the Christmas rally. All right, so NASDAQ, let me go to the other one. The CNBC futures are a little delayed, which I think is kind of lame. Like, would you just pay for the proper data, CNBC? Oh, well. So here we go. Dow right now sitting about flat, 0.03%. S&P 0.01 flat. Technologies 0.13 flat. Small cap 0.04, 0.02-ish, also flat. Quite frankly, probably the best thing you could hope for right now is just stability. And if we could hold these numbers from yesterday, that could reiterate some of these prices as floors, hopefully, and then we push again. But it's just the market we have been in has not been good to these short-term rallies. Everybody gets really excited that, oh my gosh, the bottom's in. Just be careful. I hope the bottom's in. Again, the worst thing that can happen is we go into a recession. You're like, yeah, but Kevin, and you go buy stocks. Like, it doesn't matter. Recession ruins everybody's opportunity to build wealth for years. Or at least not necessarily ruins it, but takes or it's harder to get a better job. It's harder to make more money on a main hustle or side hustle or whatever. Recessions just suck. It's more fun when everybody's got money and everybody's spending, So really, really paying attention to, I mean, look at these charts are just absolutely disgusting all over the place. And again, we see the green, we see rallies regularly on these, but we've got to test some levels here. For example, DocuSign, really, can we just, like, at bare minimum, get back to the prior floor, which also was virtually a prior ceiling here. I see it between 130 and 145 right here for DocuSign. So sort of like a temporary floor. It's like, oh, is this it? Is this the floor? Are we going to rally off of here? Is it time to buy the dip on DocuSign, right? And that ended up being a ceiling over here, second week of January. And now the question is, can we actually get back to those levels, or is this terrible trend continue? Oh, I have no idea. We will find out. Amazon under 3K. It's kind of wild to see Amazon under 3K. I mean, if you look at this channel of Amazon's nothing, this channel has existed on Amazon since July 1st, 2020. It's almost like the pandemic literally and perfectly priced in exactly how valuable Amazon was going to be during the pandemic, and then just never gave it a bone again. I mean, it is now in the lower kind of sloppy catch channel of the main channel that had been riding in. We had fun though. I mean, look at this. This was November over here. That nice bull trend over here. This is just a disaster. But again, can we push Amazon into that 3,000 to 3,400 range more consistently? Or are we going to end up getting rejected here, bobbing around here, breaking to the downside? Hopefully not. It is difficult to see us going to, like, I don't think there's any way. Some people ask me, like, oh, Kevin, can we go back to all-time highs in December? I mean, yeah, in theory we could. That would seem very unlikely, given that Jerome Powell's meeting is coming up on March 16th. And anytime prices go up, we usually get some form of profit taking. So, for example, or shorting, right? For example, people who are like, man, when Tesla went down, they saw Tesla go down to 792 or whatever, right? There are people who are like, man, I wish I sold at 950. Wish I woulda, coulda, shoulda sold at 930 when I had the chance, or shoulda sold at 1,000 when I had the chance. And so when we get these rallies, one of the reasons they're deemed to be these convictionless rallies is because we move up. Boom, we get hit with this new selling pressure because people are like, finally, my chance. and that's what keeps sort of a lid on stock prices, because there's it's almost like you've got this investor fatigue, which honestly I can't really blame after the disaster of 2021. I mean, 2021 was great for indices, but for stock picking, it was not that great. If you had a great balance, it could have worked very, very well, but it was not the easiest, especially since the Santa Claus rally never really came. The rally we had in November sold off like within, I mean, very quickly. The November rally did not last very long. It didn't even last a whole month. So we'll see. But anyway, here's ARK. You know, look at this nice little temporary shelf we drew here for ARK, and look what that did for it. Absolutely nothing. So that's the scary thing is, again, can we hit these prior rallies here? And I think that's going to be a little bit of a testament to this market. We'll see how things open today. Do you think our open's going to be critical? Not only is the open going to be critical, but watching, in my opinion, BTC, which BTC tends to move right at the opener as well. And it tends to wait to see what the S&P does to move. So, for example, here we are at ftx.us. Remember to check them out and use the referral link down below. At least check out the website. I think you'll enjoy what you see there. I don't get paid anything for you checking out just the website. It's not like a conversion-based thing or whatever. Go check it out. But I am sponsored by FTX. Yeah, but do watch this. I'm personally looking for the 39.2 level as a milestone for today. I'm setting a nice milestone. I don't think that's too difficult. And if we get a nice green S&P push here right in the first 5 minutes, we could push 39.2 within 5 minutes. So this open is going to be critical. All eyes are going to be on these indices here. And I would say the first minute to 2 minutes are usually the most bizarre, because that's when you get fund managers who oftentimes execute trades, or like the block trades come over or whatever, right? The people who need liquidity, who aren't gonna buy or sell in the pre or post market. So the first 2 minutes tend to be a little gyry. That's a twist on the word gyration, but gyry because that fits better. And I don't think that's a word. But anyway, by minute 3-4, we should have a sense of direction, at least in terms of which direction we're going here in the morning. What was really nice about yesterday, and also quite rare, is that we had a soaring morning, and we didn't get the post or end day sell-off. I saw it looked like around like 11:30 or so halfway through the trading day. It looked like we were starting, maybe more than halfway through, like 70% through the trading day. It looked like we were starting to get a fall into the close yesterday, but we actually didn't get a fall into the close. We like rallied into the close. So it was a temporary kind of like speed bump, and then it took off again. It was absolutely incredible. So, all right, folks, fingers crossed on this open here. Let's go ahead and watch the bell, and let's see what happens. All right. Let's listen in.
There's a limited pool of talent, but let's not forget, smart people out of every school in the country apply there. And they apply at Meta, David. Meta's had no cessation. Really? None. Really? None. I don't believe it. Although,
what's it going to be?
Still, you have to go through 7 rounds.
Okay, that's like 60% green. I like that. 60%. Okay, well, I'll take that kind of heat map. Now, the question is, how long is it going to stay like that? Still bobbing. Something's popping a little more red. Okay. All right. Let's see how we're doing here. So we got QQQ, first red candlestick here. Slightly to the downside, nothing too crazy or violent. So that's good. S&P, see it ran into the open, but again, that initial first few minute kind of selling pressure here. It's okay. Let it bob for the first couple minutes here, and let's see the direction. Let's look at AMC. I think that could be a little bit of a tell on risk sentiment. Look at this. We went into the open 11.4% up is what we went into the open here, as well as Shift Technologies and Lucid. Look at that perfect bounce off Lucid. Oh my gosh. All the TA. See, the people who love TA, they're like, oh, Kevin getting excited about his lines again. And the people who are TA deniers, hopefully if you watch my streams regularly, you start becoming a technical analysis believer, because it's quite ridiculous. But anyway, a perfect bounce here off of about 31 on Lucid here. It is up again from some of its lows on Friday here, but a slight rotation to the downside. Want to watch QQQ here first. It's not ideal on minute 2 right there. A little bit of a drawdown again. Again, folks, this is, and I don't want that. I want to see this move up. We want to see a second day kind of confirmation, and then the next couple weeks, we really want to see, even if it's slow, just give us a directional trend up. It doesn't have to be like an immediate rally back like we had yesterday. Just give us something nice back. Obviously, it's not unexpected to see some give back on a big day, but we just, to get out of this stock rut, to actually go back to some of the numbers we've been used to, we can't keep having green followed by red. And unfortunately, right now, that appears to be what we're getting. Tesla right now dropping to about 926. Probably BTC going to move down with this at the open here. And I'm on the 1 hour stick. Let me go down to the 1 minute stick here. Okay. No. I'm way too zoomed in, or zoomed out rather. Let's go see here. Yeah, okay, so we're at 38.7 right now. We did, as expected, at the bell, get a movement on BTC here. Very, very common to see BTC move right at the bell with the indices, depending on which direction the indices go. So here's Tesla is and unfortunately, the first 2 minutes can sometimes be so critical because they, like, after a rally day, you start seeing the first couple red candlesticks. People who are swing traders, which I know some people are like, they can't be that many swing traders. You'd be surprised. Like institutions, that's all they do every day is a swing trade, right? That could motivate some more selling pressure. So hopefully that stops. It does look like the SPY is trying to slow down its fall a little bit here. It's still flat, so it's actually not negative right now, which is good. And it seems like that current minute candlestick is trying to go back up here. Same thing on the QQQ, also mostly flat here. So not terrible. AMC only shaving off a couple percent here. So I don't think risk sentiment is really all risk off. Maybe that sets up for a nice green reversal here. And we've got Palantir moving down. It's still up 2% on the day. Lemonade's still up 2%, but definitely getting some selling pressure here to resist that open. Roblox is at $67, tied with Rivian. Boy, I never thought I'd see the day these two would be tied in the 60s. My goodness. Let's see here. Lucid. Let's get the V. Okay, Lucid. Let's see if it ends up breaking through this or holding on that 29.80 level here. Let's jump into Neo. Neo 24.22, mostly also rotating down right now. Tesla's not breaching that 1% to hold. Nice little rotation now coming on Tesla. Hopefully that stays green. Let's watch that for a second here. Let's see here. Somebody says, to see change, rock bottom has to be hit so people realize they weren't going in the right direction. Only then I see things changing to better. It's interesting. James, I missed you too. Thanks for being here. Thank you. All right, so this is good. So some initial selling pressure, that's okay. That can happen after a big rally day. Again, gives people an opportunity to exit. Very, very common. The big question now is, can we get back? There we go. Can we get these green candles back? I hope so. And can we push these back to where we started the day? So that way we can go back to that conversation we were having earlier, which was the conversation around breaking some of the previous levels of resistance that we hit on prior rallies. We really got to start having higher highs. So SPY here, nice recovery. SPY's about to go positive. Well, I mean, it pretty much has only been bouncing off flat, but it has recovered from this little hole. That's good. So SPY's got a nice little recovery here. Wild first 5 minutes here. Not terribly surprising. The good news is that selling pressure stopped pretty quickly. So that's very, very good. QQQ is behaving approximately the same way here. Tesla's only down about 1/3% right now, as opposed to that. We saw about 0.15-ish. Let's look at some of the larger losers in the day. Let's see here. Larger losers of the day. AT&T is down about 4 or 5%. That has to be news driven, which you can check out. And then we've got Logitech 2%. These are not deep reds right here. I mean, Apple barely 1% down. Neo's right around there as well. Not a lot of deep reds. So it looks like most things actually green here, though still seeing that risk evaporate a little bit here on AMC. We went as high as 11% in the pre-market. and now at 7% dual arena. Nice, Kyle. Thank you, Michael. You beat me in having to look it out. AT&T have their dividend. This is exactly what they did the last time. Maybe a year ago. Their dividend was so incredible, and everybody was buying their stock, and then they just have the dividend. It's been terrible for the stock. So it's whatever. I don't know. I don't think that's the best investor relations management, but hey, if they need the cash, they need the cash. So let's see. Okay, let's go over here. Tesla. Oh, wait, whoa. What the heck? This is, I look away for 1 minute, and this is what you do? You go from a third negative to 1 1/3 negative? Do I just have to keep my eyes on you like a little child? What is this? Oh, speaking of which, oh my gosh, like this just brings tears to my eyes. It is so, oh my gosh. I had the best freaking time with the little guys this weekend. And this, I'll tell you, one of the coolest things ever. I took Jack snowmobiling, and I just want you, it's so adorable. I just want you to see the beaming look in his eyes when we stopped to pick up some ice. And look at how adorable this is. Look at this little guy. Oh man, I just want to go back there and snowmobile with him again. That was so fun. Anyway, sorry. That was great. So anyway, some good news there in the red candlesticks. Okay, so let's see. Are the indices going to push down as well? I want to look at some of the others here. Oh, look at SoFi. Nice move here on SoFi. I'm trying to get back over $13. SoFi is actually ripping right now too. So SoFi's ripping. Toast kind of stable here. AMC's trying to push back a little bit. Good. Back to 9%. The only one ripping right now is SoFi. I'm not seeing many of these rip. Look at normal things instead of candles. I know. GME is obviously sympathy trading here with AMC. Just trying to get an overall feeling of the risk sentiment here. Look at this, folks. This is a sign that the short covering is not here yet. When you look at like Shift Technologies and Lemonade, after a crazy day like yesterday, you'd think you'd shake some shorts loose, right? It's kind of like get those shorts to paper hand and get out of here, and let the market actually move again. But that's not what we're seeing right now on Shift and Lemonade, at least not in the early price action here. A Cloudflare back to 97. That's actually pretty incredible, given that the thing was sitting at like 80 for a while. Yeah, look at that. It was at $76 on my birthday, and then went up 12%, followed by another 7% rally. I mean, that's 2 really good days in a row there on Cloudflare. Really has needed it. We've seen this. Look, folks, fool me once, shame on you. Fool me twice, shame on me. We've literally seen these 2-day candlesticks before. Like we have literally seen these kinds of rallies before. And we at this point, can we just get something that sustains? We're pretty tired of this. This is Tesla on the day, going back to the minute here, sitting solid right now around that 1.4 to the downside. Not that big of a give back. If you think about it, like, come on, it had a 10% day yesterday. So what? It gives back 1.3 today, right? Big freaking deal. But again, we're looking for some form of a reiteration that we can more consistently move to the upside here. And okay, so surprisingly, not a lot of big pain still. Let's go look at some headlines here. Not a lot of big pain. The biggest pain beyond AT&T on their dividend move is really here, TMC at about 4%, but then you quickly get into the 1% and 2%. Big deal. That's relatively nominal here. All right, so let's see here. Let's go look at some of the beautiful things going on in the news. All right. Equities drift as Fed officials express caution. When do they do that? Let's see here. U.S. stocks drifted in early trading as Federal Reserve officials cautioned against disruptive policy tightening. And U.S. companies signaled another strong earnings season. Drifted. What does drifted mean? Let's see. S&P was little changed. Okay. 4 Fed officials said they'll back interest rate increases at a pace that doesn't disrupt the economy. Calming markets unnerved by the previous. Well, this was over the weekend. None of this is actually new from this morning. So that was already part of our excitement and euphoria yesterday. However, a few Fed officials expressed caution over faster than necessary tightening, including Mary Daly, who cited a number of risk factors to the economy, including the ongoing pandemic. No one wants to upset the economy. It's funny how they're trying to play the violin for us right now. But the reality is, as long as we still have this inflation surge and this tailwind that's pushing us of rents going up, which rent inflation here shows that landlords have the upper hand again, right? This continues to push CPI up, which ultimately forces the Fed's hand. They'd be like, oh no, everybody chill out, it's all gonna be okay. We're just gonna keep raising rates and keep raising rates and keep raising rates. And then when that does nothing, which I really expect the rate increases to do virtually nothing for the market. It's like we're gonna get this half-point increase on March 16th. Everybody freaks out, and then what? Oh, it's okay. Rates went up a little bit. Nobody cares. Big deal. The problem though is I don't think it's actually going to lower inflation. What really lowers inflation is people either not buying as much, or us actually fixing the supply problem. So a combination of those is the most likely scenario. Anyway, so rent inflation, by the way, the problem with this and the way they calculate CPI is you get a really good lag in CPI. CPI is sitting at about a 6-month lag, which is quite terrible if you think about it. A 6-month lag for CPI for rents. And why is that? Well, theorizing, first you have to think to yourself, right now I just want you to picture your neighborhood. Everybody in your neighborhood, I don't know, maybe you've got the 100 homes closest to you or the 100 apartments closest to you. It doesn't matter. Apartment homes is all the same. And now let's say, pandemic hits and rents instantly go up 20%. Instantly, everything goes up 20%. Well, now everybody looks around. You look around at all your neighbors, your 100 neighbors or whatever, and you're like, did anybody's rent go up yet? No, technically no. Nobody's rent went up yet. Like if rents literally Monday went up 20%, the next day nobody's rent has gone up that high yet. But then, when Sally next door's lease expires in 2 weeks, she's going to get reamed with higher rent, right? When Billy's lease expires in 2 months, he's going to get reamed with this higher rent. So and then the way they calculate CPIs too, using owner's equivalent, which is basically when the landlord feels like their rent has actually gone up. It's insane. And so usually this is why you have this crazy 6-month delay. And that's a problem because that gives you some of a tailwind pain to adding to inflation. So as used car prices come down, you could actually see rents offset that substantially. People see when inflation numbers first started coming out, and I was one of the people looking at it going like, it's just used cars. Who cares, right? Problem is, it's like everything now. And used cars is a lot smaller a percentage than housing. Anyway, so, okay. I do want to see a little bit more of what we've got on headlines here, but it does look like the S&P has just turned negative, not by much, by 0.13. Who cares? One of the big things about the SPY that I really like right now is that we are sitting nicely above that 430 line, folks. See this 430 line here? Look, we have a very strong support level drawn here. We're nicely away from that right now. So even though it's like, we're red, tiny little bit red, who cares? We're so far away here. No bull market till 2024 BTC halving cycle. Prediction, Jerome loses grip of everything. QE to infinity. The worst case scenario is that I call it the SH9T scenario. And then in that scenario, in that scenario, Jerome Powell and the Federal Reserve do lose control to the point where they feel they have to continue raising rates even while our economy potentially goes into a recession. And a lot of folks, they tell me, Kevin, why? Oh, hold on. This is the ISM numbers. It was a slight beat actually from estimate. Hold on.
Live breaking news. We're looking for the current read, the January final read for market manufacturing PMI.
Sorry. Manufacturing PMI.
Mid-month read at 55.0 holes, and the number is 55.5. So it did move a bit higher. That now.
All right. Anyway, so it's slightly positive over expectations. But anyway, what was I say? Oh yeah, people are like, how could the Fed let us go into a recession? Won't they bail us out? Well, it depends. If we go into a paper recession, which is 2 negative quarters of GDP, right? We go into that. What happens when we still have high inflation? well, then at some point, the Fed's just going to go, sorry, we don't care about your recession. We need to deal with the inflation. As long as the job market's still strong, relatively strong, just because we have a GDP-induced recession. Sorry. And I think that's when you get mass panic, right? Because then it's like, wait a minute. Well, like the Fed's supposed to bail us out, and then they're not. That's like a low chance. That's terrible, worst case scenario. But that is a scenario. So okay, let's look at some other things here. Okay, so we talked about rent, but we already knew this. We didn't even have to go through this. The thing that I really want to pay attention to is real estate. But we're not going to do that right now. So right now we're going to focus on stocks. Let's see, Tesla. Tesla agrees to drop self-driving feature that runs stop signs. Yeah, so in case you didn't know this, there was a setting that you could basically California stop the stop signs. Just like it slows on autopilot and then kind of keeps rolling. Yeah, not the most brilliant idea there, Tesla. Just like rubbing it in the face of lawmakers. Very bad. Oh well. So UPS surges after 2022 forecasts exceed Wall Street estimates. So, okay, this is interesting. I'm going to go through the, whatever. Here, let's just do this right now. I don't really want to log in. One of the things UPS is up 12% on their earnings beat here. And it was mostly their forecast, it sounds like here. Let me see, am I logged into it? It seems like every time I'm gone for 2 days, everything just logs itself out. No, there we go. Okay, good. So UPS reported better than expected, blah, 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 raising its dividend. I want to see the guide because this does tell us something about consumers, right? And people spending more is something that actually contributes to inflation. This is where this bizarre market where we're in, where it's like good news is bad news, right? It's like, oh, yay. UPS is doing better. Yay, the consumer's so strong. How can we go into a recession if the consumer's so strong? Oh, you can change really fast. But anyway, all this does right now is contribute to inflation. I want to thank all UPS. Okay, whatever. I'm not going to read this. I want to see the forecast. Company operating margins are expected to be 13.7% in 2022. Full year margins came in at 13.5%. So that's actually a slight increase in operating profit margins. Okay, that blows my mind, first of all. That absolutely blows my mind because gas is like ridiculously expensive right now. And if UPS can forecast a higher profit margin while gas is ridiculously expensive, then you know what that means, right? Think about it. Margins up, costs up. How is that possible? Price went up more. Oh my gosh. And then here's an update. FedEx suspends some freight services due to staff shortages. I'll tell you, every place I went to in Park City, Utah was complaining about staffing shortages. Every single place. They don't have enough ski patrol. They don't have enough staff in the restaurant. They don't have enough lift workers. I don't know. It's just nutty market. Anyway, okay, good. Look at this a little U-turn here on the SPY. So we were having some initial pain there. Nice little U-turn here. Good. Let's go take a look at Tesla. It was down as much as 2 something. There we go. Good recovery here. Did fall down to about 910 before starting to reverse. Right now, sitting about 921. Good. Okay. So I mean, it always blows my mind that on days like this, which are technically volatile, we. Where the volatility index technically goes down. But this is more indice based. So, anyway, we are seeing a little bit of a deeper red over here. Specifically, look at this. United Wholesale Mortgage and Rocket Mortgage. These guys just getting reamed. And the fear about rising interest rates has really been getting priced in for a while. But we just keep pricing in more pain into these guys here. It's terrible. Tom Brady officially now announcing his retirement. I mean, what a weekend. I saw that over the weekend and it's like, oh, is he retiring? Oh, no, he's not retiring. Oh, maybe he is. Oh, okay. You have to give the guy props. I mean, what is he, like 44 years old? in a career most people retire out at before they're 30. It's quite impressive. Really, really good at inflating balls too, but we won't go there. So anyway, so what do we got over here? AMC, kind of giving up some of its enthusiasm. SoFi was the one that was really killing it. Let me see if this keeps going here. SoFi. Okay. So it had its little rally here to about 13. It just couldn't break above 13. All right. So, okay. All right. So this is going to be stuff for us to watch here. Let's see. Open. Somebody says Open's doing well. I'll take a peek here. Open. Yeah, Open's doing strut. That's nice. Okay. That's deflatable. Yeah. Oh. Sorry. I think you misspelled debatable. That's funny. Anyway. Okay. So, Arrival had an insane day yesterday. I thought this thing was up like 20% or something like that. 19% followed by 8.9%. But look at the chart, folks. Quite scary. Yeah, we had a 3, we had a 4, a 6 over here. Just seeing if we had any large outsized rallies. That is about the largest rally though that I've seen on Arrival in a while, which I think is a good sign, because all of these other little greens right here have all been like 3 to 6%. And the fact that we had a 19%, it makes me wonder, like, is that a sign of potentially bouncing off of a bottom? I don't know yet. Obviously, certainly hindsight will tell us. But some of the largest rallies we had yesterday. It's just Tesla is really wanting to stay in that negative trend here for today. Again, great day yesterday, but negative trend, stuck in that trend today. Really reiterating that psychology of, okay, we had a good green day. This is a new opportunity to reload on the shorts. It's like the shotgun, reloading the shotgun for the shorts. You get those on green days. And then you've got a, potential sell opportunity as well. Okay, a little bit more. Let's look at a little bit more news here. And let's see. Okay, so this is Barons. Love Barons, by the way. People always ask me, what's one of your favorite subs? Barons. Really good. And Kathy likes them. I'm not sponsored. I'm sponsored by FTX in the link down below, which you definitely check out them, especially if you trade crypto. If you're trading crypto, you should be trading crypto there. And check them out via the link down below, or go to metkevin.com/FTXUS. But Barons, not sponsored by them. Kathy uses them too. I suspect. I don't know that with certainty, but it seems like every time she talks, it feels like she's read the same Barron's articles I have. Anyway, so all right. I wouldn't say anything super immediate here. A little bit more longer run commentary here. So CNBC, not much dramatically. What's this? There we go, Bloomberg. Okay, so check out Tesla on the 4-hour chart. Okay, I'll try that in a sec. Europe inflation woes, Fed signals. Okay. Welcome to Tuesday. Here's the latest. Federal Reserve officials say they want to avoid unnecessary disrupting of markets, right? Markets may be wrong to think Jerome Powell's hawkish comments signal an admission by the Fed that's behind the curve. This is what Bloomberg thinks. Although sometimes Bloomberg predicts stuff and totally the opposite happens, which is fair. I mean, every prediction can go wrong. But anyway, U.S. rent inflation may add to the impetus that the Federal Reserve has for higher interest rates, though the inflation cure could backfire. Right. Well, that's the fear. It's kind of like what did we always say during COVID? It was like the cure is worse than the disease. Is what a lot of folks were saying during COVID. And I'm not trying to make like a political point here, but I'm trying to compare that to the Fed. Like, what if the vaccine or the cure, the cocktail that's going to help us against inflation actually ends up causing more problems than the inflation itself would? It's like, maybe just let them rip. Just let the prices go up a bit. How long is it going to last? A year or two, and then do prices stabilize? I don't know. Yeah. Americans across income groups succeeded in recouping earnings lost in COVID-19 in 2021, though gains for the poorest may be short-lived. Let's see here. European markets are awash in hawkish enthusiasm as traders bet on the fastest pace of policy tightening in more than a decade. Although Germany and France had inflation that slowed, oh, that's bad actually, less than expected in January. That's true. I remember now. I think it was the Eurozone numbers came in a little bit weaker, but the German numbers came in worse. How to, yeah, this is actually kind of a funny irony here. Somebody here wrote, how to fix inflation, stop printing money. And you know how everybody's freaking out about all the inflation right now? And we are still printing money right now to the tune of $30 billion next month. It's insane. Actually, isn't it 30 plus 15? It might be as much as 45. But anyway, until March, we're still printing money, which is just absolutely insane. It's like they're worried about this runaway inflation, yet they're still printing money. and then I always get the comments, hey, Kevin, you don't print money. Okay, it's digitally print. Anyway, whatever. So let's see. AMC, 7%. That's, I think, a good little risk threshold for us to keep an eye on. Open Door is still pushing. SoFi gave up. Let me see here. Did it break 13 yet is what we're watching. No, it's stuck at that 1288 number here. Excuse me. It's going to leave crypto a little stuck in the mud for a bit. Oh, whoa, Siri, just don't do that. That's it, short Apple. How is Apple doing today? All right. So let's see here. Okay, bouncing off that 1% loss here. NVIDIA is actually way higher than where it was. I remember it was like 219 at one point, remember? It's at 242 right now. So even though it's down 1%, it's substantially better than what we saw. Look at that. It actually went down to 208. That's wild. I think that was, oh, crap. Whatever. I'm just going to delete this. I hate it when that happens. Make sure it's in a little lock on. Anyway. Okay, so intraday, here's Matterport dragging along the bottom here. Roblox, Nvidia, kind of all bobbing around the bottom here. How about the indices? SPY, pretty close to flat. I got to tell you, that's one of the most addicting things about the indices is they don't move much, usually. Like a bad day is like 1 or 2%, right? Anyway, Tesla is about 2%. We'll see if we can get any kind of recovery towards the end of the day, but a little bit of a rough open. Honestly, though, not a bad give back. After yesterday's rally and rip, not a bad give back at all. To give back 2 or 3%, who cares? So anyway, let's keep an eye on some of the things that are going on. Thank you so much for being here. And folks, we'll see you next one. Thanks.